Hi everyone, I'm Melinda Jennison from Streamline Property Buyers, and I'm going to provide a summary of the very latest data from both PropTrack, SQM Research and CoreLogic up to the end of November for information relevant to Brisbane. As you will see, in terms of our market snapshot, listing volumes here in Brisbane, total listings are still 18.6% lower today than they were 12 months ago. We're going to get a little bit more granular in terms of what this means in the presentation today. Auction clearance rates remained stable between October and November this year. We've still got high buyer activity throughout Brisbane. House values, according to CoreLogic, increased 1.4% over the month of November, and a 1% increase in unit values was realised as well. Dwelling yields currently sitting at 4%, and we're going to explain how that translates to house yields and unit yields throughout this presentation. Looking first of all at listing volumes. Now, right now in Brisbane, listing volumes are about 30% down on their long-term average. And you can see that through the graph on the left-hand side of the screen. Consistently, or in the past, we had between 28 and 32,000 listings per month across Greater Brisbane, and now that's down to between 18 and 20,000 per month. If we zoom in on the listings for the current year from January through to December, you can see that it's been relatively consistent, except for March, where we saw a slight increase in the number of options available to buyers. When we're looking at new listings, that's the light blue bar, and we did see a slight increase of 3.2% from October to November, as reported by SQM Research. However, overall listings, as you can see by the total height of these bars, did not change considerably at all. What I will say, though, is that long-term average is what's causing that imbalance between supply and demand, and it is what is keeping that upward pressure on prices here in Brisbane. Unlike other major capital city markets such as Sydney, Melbourne, Hobart and Canberra, where listing volumes are back at their long-term average or even exceeding the long-term average, so buyers have a lot more choice in those locations. Sales volumes in Brisbane still down 12.4% compared to this time last year, partly due to a lack of stock available for sale. So certainly not an indication that the market is slowing down. It's more a function of supply. Looking at auction clearance rates, you can see there the trend from September, October and November. So not much change in terms of those clearance rates between October and November. A couple of other metrics to share with you. The average count of registered bidders in Brisbane increased from 3.4 people per auction in October to 3.67 people in November per auction. So slightly stronger buyer depth in the last 4 weeks compared to October. We also saw the number of active bidders decline slightly from 62.5% in October to 58% throughout November. So that's potentially an indication of some buyers turning up at auctions who may not have the budget to buy, and they are priced out with that opening bid, or it's an indication of people that are nervous and are not willing to actually raise their paddle. Let's look at what's happening in terms of dwelling value changes in Brisbane. So you can see here that dwelling values across Brisbane increased 1.3% throughout November, according to CoreLogic, and this is second only behind Perth in terms of that monthly price growth. On a quarterly basis, Brisbane's experienced 3.9% change in dwelling prices, and annual growth is now sitting at 10.7%. The median value of a dwelling in Greater Brisbane is $779,210, which is $8,695 more than it was last month. PropTrack showed the same positive dwelling price growth for the month. And we can also see with the PropTrack information that the annual growth figure of 8.85% for Brisbane exceeds both the capital city average and the national average. So Brisbane has definitely outperformed the average for all capital cities across Australia over the last 12 months. Looking at the price segmentation throughout Brisbane, last month we reported that the top end of the market was still leading the price growth, but the bottom end of the market had showed a recovery. This month, the bottom 25% of property values have actually taken the growth slightly above the top 25% of property values. So that the lowest value properties, those that are in the bottom 25% of property values in Brisbane, are now leading the price growth over a quarterly or a 3-month period. It's important to note that this relates to dwelling values, so it will include most of the unit data as well as townhouse data within these figures. And we all know in Brisbane, most units and a lot of townhouses will fall in the bottom 25% of property value. So we need to be mindful of how we're interpreting this data. Looking at house values, we saw for the last 3 months now, 3 consecutive months, house values have increased at 1.4% each month. So that's actually very strong and consistent price growth across Brisbane. We're looking at a year-to-date growth rate of 12.1% for Brisbane now. And in that time period, we've seen consistent month-on-month price growth. The current median, according to CoreLogic, is sitting at $870,526. And that's actually $10,061 more than it was just 4 weeks ago. PropTrack information or PropTrack data confirms the same pattern, positive price growth throughout Brisbane for November. It also shows the annual growth in house prices in Brisbane has exceeded the national and capital city averages. So again, Brisbane has been an outperforming capital city market for 2023. Looking at unit values in Brisbane, they have continued to escalate throughout November with a further 1% price growth throughout the month recorded by CoreLogic. I will say that unit price growth in Brisbane on an annual basis is still stronger than house price growth based on CoreLogic data. So this is despite the fact that unit price growth has been less than house price growth on a month-by-month basis since July this year. So we're going to show a demonstration of why that may be the case with a slide that's yet to come. The median value of a unit in Greater Brisbane is now $552,332, which is $6,977 more than this time last month. According to PropTrack data, there's been a slight decline across the month for unit values in Brisbane. Again, not sure why they're showing a different trend. It's certainly not what we're observing based on a lot of the inner and middle ring unit markets in Brisbane. But annual growth rate there at 9.17% for units across Brisbane shows that has well and truly exceeded both the capital city and the national average for annual growth indicators. This is the price segmentation for both units and houses. The dark lines are house price growth on a month-by-month basis, and the light blue lines are that unit price growth. The reason that units have outperformed houses across Brisbane over the last 12 months is because during the downturn in the latter months of 2022, the unit market did not actually fall anywhere near as much as the housing market did. During the recovery throughout most of the months of 2023, we've seen fairly consistent growth across both segments of the market. However, house price growth has been slightly superior since July on a month-by-month basis. Looking at rental vacancy rates across Brisbane, they have retracted again between September and October from 1% to 0.9%. So the long-term trend is still that the vacancy rates are extremely tight. When we zoom into what's actually happened just across 2023, you can see that for the majority of this time period, vacancy rates have been at or below 1% according to SQM research. So very tight vacancy, not a lot available to rent, and this is what is continuing to cause that upward pressure on rents. Looking at rental price growth, growth in rents for the houses across Brisbane has actually slowed down a little bit. Annual growth is now sitting at 6.6% for rents for houses across Brisbane. Now, with house price growth for purchase costs, according to CoreLogic, sitting at 10.6%, it's evident now that the house price growth has exceeded rental price growth, and so because of that, it's compressing gross rental yields in the housing market. Whereas we were at about 4% gross rental yields for houses, that's now dropped back to 3.7% for houses across Brisbane. Looking at the unit market, the opposite is actually true. Unit rents have increased 13.2% according to CoreLogic information. However, unit prices have increased 11.3% across the same period of time. So this means gross rental yields for units in Brisbane will still be rising, and that they are currently sitting at 5.2% across the city, which I'm sure you all agree is a very strong median value for gross rental yields. Looking at the market as a summary, Brisbane does still remain the second fastest growing capital city market behind Perth. Now, it's important at this point to not overlook the downside risks that exist. Obviously, interest rates are considerably higher today than they were 18 months ago, and this does affect affordability, and consumer sentiment is still extremely low as well. But what distinguishes Brisbane, along with other markets like Perth and Adelaide, is that they're demonstrating consistently month-on-month price growth, and it's the fact that we still got those very low listing volumes, as we pointed out in some of those graphs in this presentation. This means that there's more buyers competing for less stock, so buyer depth remains very strong and multiple offers are still very common. Properties are selling quickly simply because there's a lot of that price pressure, and you can see even in this photo, this is a lineup of people inspecting a property which was a townhouse within 6 kilometres of the CBD. So a blue chip townhouse, and we are seeing a lot of those blue chip units and townhouses, highly desirable, highly sought after, and therefore competitively contested. I will say it's a great time to reflect on the last 12 months and how quickly property markets have actually turned around, and why timing the market is never a fantastic strategy. It can be a really hard approach to adopt. 12 months ago, as Brisbane prices were falling month on month, there was a lot of fear and uncertainty amongst both buyers and sellers across our city. But fast forward to today, and those who did follow the Warren Buffett theory of be greedy when others are fearful, they've been greatly rewarded. As we approach Christmas, we do expect those listing volumes to further decline. Buyers are likely to become less active in the market as they gear up for the festive season also. We do expect the coming month will be summarised, I guess you can say, by lower volume of activity. However, as we start 2024, we expect that it will be another exciting year for Brisbane, and unless we see any significant increase in the number of listings that do become available for property buyers, we do expect to continue to see that upward pressure on prices. If you would like to get in touch with myself or our team, or explore how we can help you to purchase an investment grade property here in Brisbane, please reach out to us by scanning the QR code here. You'll be able to either book a call or access some of the free resources that we put out to property buyers. Hope you have a fabulous Christmas. Enjoy the holiday time with your family, and we look forward to connecting with you again next year. Thank you for your time, and bye for now.